Hey, what's up? Let me know if you guys can hear me okay. Uh, be sure to like as you pop in here. Thanks so much for popping in. Pretty cool subject. It's something that I have not shared before, and it's actually something that everybody can implement. So I know I talk a lot about starting a fund and all of that. But today I want to talk about some of the benefits that even if you're just a business owner and you're not necessarily thinking about growing a fund, it can be really valuable for you, especially from a tax standpoint. So let's see. For some reason, I'm not seeing comments. If you don't mind, just shoot me a comment in here. Let me know if you can hear me or not. There we go. It's just a little slow. Perfect. Awesome. Thanks, Vaughn. I appreciate that. Austin, I appreciate that. All right, so let's jump in. I don't want to do this whole thing and then realize, oh, yeah, the audio is not working. Great. All right, so let's talk about using funds. Even if you're a business owner right now, you've got a business, it's making money. How does that person benefit from being in a fund? And also feel free, I see a question that come in, but feel free to pop in any questions. I'll get to those at the end of this quick video. So one of the things, even this is years ago in my first fund, I started to realize that the fund really acts as a separation between you and the business and almost a place, a pool where you can put money and not have to pay tax on the profit of the businesses that are in your fund. So once I realized that with my first fund, I was like, man, I am very shocked that more people don't use it. So let me break this down. Basically, if you have a company, let's say you got a company, it's making $500,000 a year. And that business right now, every time you make $1 million over the year, you've got to pay taxes on that $500,000, which is a serious amount of money. And right now everybody's really worried about Biden, and so this is one of the things that you can do to protect yourself against that. And so if you switch that from, okay, I have this one company that's generating this amount of money, and you look at the fund, even from a personal finance standpoint, and the money that you make, you're gonna maybe buy a rental property. Maybe you are going to go and buy another small business that's complementary to your business. Maybe you're going to invest in the stock market. And so by creating this private equity fund, what you're able to do is take that $500,000 that's in the company and have that company be bought by your fund in a, it could be a no money down deal, which there are some really cool ways you can structure that. That gets into some kind of, more complicated strategies, but I'll keep things simple here. But you can take that company, buy it with your fund. That fund starts to make the $500,000 instead of that coming out of the company into you or to other investments. Because even if you take that money and you do go buy another business, now it's still come out of that company, and now it's going to be taxed. So by coming up to the fund, now it sits in this pool, and you can do everything that you're going to do anyway with that business outside of buying, personal stuff. It's got to be for the investments. And now let's say you take that money and you buy a piece of rental property. And especially if you're somebody who's going to flip, one of the really, really crazy things is LPs in that fund are taxed as at a 15% rate. So it's a long-term capital tax. It's capital gain tax. It's not that the short-term, which really hits you over the head. It's not ordinary income, which really hits you over the head. You basically get this huge tax benefit just by creating that structure. Now, another cool thing that you can do is you've got this fund, so you can start to buy other assets that are complementary to that business. And one of the things that you'll find is in this stuff, even with company one that was generating the $500,000, and just every client that I'm working with now, it's like, if you buy a business and it's making money, and you should only be buying a business that makes money, you should have a fund. Like there's just no reason you shouldn't. And the other part of that is, if you're in a business right now and you're making money, you should have a fund. And this becomes a lot more important as we see some of these tax changes that are being made. So if you're planning on, and it's really better, I just think sometimes it can look a little weird if you start on the back end. It's better when you start at the very beginning that, hey, this is a private equity fund and this is what we're going to do. And you buy that first business and now you have this kind of favorable tax structure, and it's not on the back end. Trying to come back on the back end and the IRS is what they're a lot of times are looking for is irregularity. So they see, oh, you've been paying this amount of tax for every year, and now you've done something weird and you're making the same amount of money and you're not paying that. And that causes a little bit of suspicion. So if you start from the very beginning with this structure, then it just makes sense. Like, this is what you do, and you do understand that this is the business that you're in. It's not just to try to game the tax system. But a lot of people get annoyed. A lot of people get frustrated that, well, the people pay so little in taxes. And it's just doing a lot of these things. But I think a lot of times, if you're getting in late to the game, it makes you look a little weird. So starting from the very beginning, I think is important. But let's talk a little bit more about that reinvestment strategy. One of the things that you're going to find if you're investing in small businesses is there's an ebb and flow. There's a trajectory. Sometimes it's going to do really well in years. It's going to do not so well in other years. And what this allows you to do is, if you've got a portfolio of businesses, instead of that one company, if every year you've got one company that does really well, you got to take that money out, get hit, chopped in half on taxes, basically. And now you've got to reinvest that across the other businesses that maybe need a new marketing strategy. Maybe you're investing in new software. You've got to go out and buy a new product and develop that. Just whatever the case is, you're having to use all of your after-tax money to put into these other deals. And so it is a huge game changer. I mean, when you multiply the impact of this over 5, 6, 7 years, it definitely outweighs the cost of creating the fund. But more importantly, the ability to impact the growth of your business with those pre-tax dollars is a hugely beneficial thing to just increasing your wealth. So it saves you on one end, but then the impact long term of being able to invest those pre-tax dollars is a very big deal. So hopefully this is beneficial. I'll take some quick questions and we'll get back to work on this beautiful Tuesday. All right, let's see. Luke, what up? Yes, and so this is one of the many strategies we're talking about in the book, which there are a lot more complicated things that are cool, but I mean, just this is literally $1 million for that. Even if you're making $100,000 a year or whatever, when you multiply the savings on one end and the impact of reinvesting those dollars on the other end, this is a multi-million-dollar strategy for even the average income earner over the course of your life. Yo, what up, Clay? Thanks for popping in. Good deal. Hey, let's see. Hold on. When do you get feedback on a deal? Oh, on the deal maker sign up. Just reach out. I'll put an email once I post this video. I'll put an email below. We are behind. If you're somebody who's interested in the private equity program, we are going through a lot of those. We're going to have a call coming up next week. So even if you entered before as being interested, go ahead and do that again, because I want to make sure that we get you, and we're going through that process. And as you guys know, we only take 4 people at a time. The last 4 absolutely rocking it, killing it. I mentioned Curtis deal, which is about 300% return first year. Laurent's doing an amazing job with his business. Really excited with, and we kind of split it up. So they've got deals. It's the fund, but they've got deals that they're leads on. So I'm excited to get started with some more of you and getting your fund built, created, letting you invest my money. I'm giving you my money to invest. And so it's a very selective process. I'm not going to lie. If I'm giving you my money, number one, I got to like you. You got to have a great attitude. You got to be pretty smart. This isn't just come, sign up, pay, and be done. So if you're interested in that, acechapman.com. Feel free to reach out again, even if you reached out before, because the program has been closed for a long time. If you're interested in the other programs, I'll put an email below as well. All right. I think that's all the questions. Oh, I got one more. Let's see. Hey. All right. So we got... Love this. I've never thought about this idea of a microfund. Yes, I'm so adamant. The more we do these funds, the more benefits I see from getting people started really early. And I think one of the downsides to private equity funds, when people hear that concept or hear about creating a private equity fund, they just feel like, hey, that's out of my league. That's not something I can do. That's something billionaires do. And it's really kind of the point, though. The point is, hey, let me see what the billionaires are doing, because it's probably a good idea. They've already done a lot of the research. They've already put a ton of attorneys and accountants to work trying to figure out what the best strategies are. And so I think it's a case of, you want to do what they're doing. And with this micro fund strategy, it makes it something that essentially everybody can do. And so this first round of the private equity fund incubator was cool for me, because it showed me, hey, you can take folks that have not had any experience with this stuff and have them grow, operate, and create a profitable fund from scratch. Let's go to Nesto. All right, so what is the day-to-day management of running a fund? So for micro funds, most of the time it's going to be a side thing. It's not even that you're spending all day necessarily running the fund. What you're spending the day doing is overseeing and helping those businesses. One of the toughest things for businesses is they end up in a situation where they're drowning in operating in that business. I mean, for any of you that run a business, that running a business is work. It's a full-time thing. It's a life thing, 24/7. As much as it's glamorized on Instagram, running a business is a lot of work. And so what we're able to do when we come in and get involved with these businesses is help that owner by working on the business, looking for strategic partnerships, looking for opportunities within the business to increase efficiency. Things that, number one, maybe they're too close to the business to see, and number two, maybe they just don't have the time and brain energy. And then number three, we're doing this all day. We're looking at all of these different businesses, coming up with different strategies, trying to impact those businesses so we can take ideas and cross-pollinate those across other businesses, which that becomes a huge benefit. And so on a day-to-day basis, that's kind of the number one goal. That's the thing that's going to impact the fund the best, the most. When I'm talking about getting a 300% return, that's what it's all about. Part of it is structuring the deal correctly, being sure that you can, you can get into the deal making more money. So if you can use leverage and then you can improve the business, that is a win-win. Gary, what is up? Thanks for more, please. Yes, so I've just talked about the courses, Shah, and I will put an email below once I post this that you guys can contact. Actually, I can go ahead and put that here. So hit Nori. And we are actually doing interviews as we speak for the private equity fund incubator if you're interested in that. But regardless, she can get you sent in the right direction. And there's just a lot of deals right now. There are also just deals. So you should get on the deal list if you're interested in buying something. Oh yeah, I didn't even get into this, and I wish this happened before I finished my book, Vaughn. It's unfortunate, but yes, now is an amazing time. The SEC has relaxed a lot of the investor restrictions. They've increased the amount that you can raise on some of these micro deals, and so there's a big opportunity there. All right. Alan asks, what's up, Alan? What is the most you can invest? There's not a limit on the most. There's not a limit on the most. So you can invest as much as you like. I mean, that's the cool thing, is that these strategies are, like I said, used by billionaires. So the amount of money, it actually doesn't impact the strategy. It is Nori at incomeacquisitions.com, and I plugged it into the chat. Just saw that post. All right, this is a good question, and then I'm gonna bounce out of here. From Clay, what's up, Clay? Hey, Ace, the fund that you are about to start, what sector will it be in businesses in? It's going to be in internet businesses. So there's a lot of reasons why. I'll give one reason and we'll bounce out of here. One of the reasons that with my funds, I've been really focused on internet businesses is the amount of time on market. And there's actually 5 specific reasons, but one of them is when you look at a fund, one of the toughest aspects is you've got to be able to exit the deals in order to get a really good return. And for offline businesses, you've only got maybe a 90-mile radius of people that can buy that business. They have to be interested in that business within those 90-mile radius. They may want to have some kind of experience. Then they've got to have the money as well. It's a lot of things. And so with the internet business, it's just a much more liquid market. When you're looking at being able to exit a business, it's important to be able to sell to whoever wants to buy it. And the great thing about an internet-based asset is it opens you up to be able to sell to anyone in the world, and that creates some additional liquidity and helps ensure that when we're ready, we're going to be able to exit those deals. All right, last one. I said that was the last one. I'll do one more because this is important. Value add, mastery, what's up? What's the key difference between micro PE and PE? There's huge differences on the strategy. Like we're not using the public markets, we're using private markets. We're not able to get leverage from institutions and those kinds of things. And also we don't have to deal with the public markets voting on a deal. There's just all these different things. But what it really comes down to is I consider micro PE to be deals under $10 million, and PE is deals over 10 million. And that number's come down. They've been chasing return. You wouldn't see larger PE funds back when I started doing this stuff go below 50 million. But because the returns are so great, and it's the only reason that we exist, the only reason we can get the kind of returns that we get is because we don't have to compete with real large PE funds, because those funds they get money from institutions that they're ecstatic to get 12%, 13%. And so what that does is when you're getting money from people that are excited to get a 12% return, you go into a deal and you bid the price up because you're competing with another private equity fund that they only have to generate 12% returns for their investors. And so each one is bidding up the price to the point that you're only going to get a 12% return. So it becomes kind of self-fulfilling. All right, thanks. Really great questions. I appreciate when you guys come up with really great questions, and look forward to seeing you here again soon.